Hello and welcome, as it is currently the 19th day of November 2020, 10:40 a.m. Eastern as I'm doing this video. It's later than that when you're watching it. And this is way back when, shortly thereafter, 2006. Silver is $8.98. But what a decent run since the August timeframe where it went from 670. And it continued to go up, and there's a line in here. And we'll explain this line and several other lines within this video. Of course, all bets, trades, and the likes within each's own risk and their own reward. It's a key resistance point. If you don't find resistance or support where you're supposed to, you often have a concise move to the next key one. And the next key one, 1447. Well, it came up to it, found support on the 18, retesting it again. No, not quite. And then, as it broke down from this, we can see after established support, well, it came down to 1047, and albeit relatively successfully, in fact, very successful at that. And then we enter 2007. At this point, if you were to ask me about investing in silver, I wouldn't even consider anything like that. If you were to say the Canadian coin that you would invest in is a silver blank ION, and it can be any animal. You can take a cow, a horse, a dog, a bull, a bear, whatever one you want to take. You would own silver blank, and you'd show a picture of, say, a silver eagle, whatever. Show a picture of a silver eagle. That's what it would be. I wouldn't know it would be a bull, but it then hits this level of resistance again, and it pulls back. But you see how we're making the higher lows. That's a key point, and you'd have to do a lot of waiting, but you'd have an intra move, and later on, okay, there we are. We're back to this level. Now, if you're talk to me about what silver bullion is, then I'd have a little bit of an idea. I know what the market's doing, because I'm learning the stock market and how to trade at this stage of my life. And then it breaks out higher and higher. And if you're asking me what a fiat currency is at this point, I could probably answer you pretty well now. And I'm buying my first ounce of silver, 2 of them, as we approach these highs. And the next line is 21.40. Ooh, 2 days in which it hit it. Bear Stearns is the first thing. A few months later is Lehman Brothers. Great recession, you might have heard. President Bush was the president at this time, and a little bit of support here at 1447. Not much at all. 1047 on the way down. Damn good. Oh, wow. Oop. Maybe not as good as we thought. But what did we have here? We had a spot where it was resistance on several occasions. Unable to break down below support. Higher low 1, higher low 2. And then support this big 1047 again. Resist 1447. Okay. After making a nice higher low, almost coming back to where it came from with this high. Oh, that was close, but still a good correction. It made several lower lows on the intra-move trend. But within all those lower lows, the final low, much higher than these ones, because it made a whole bunch of higher ones here. So obviously higher than the $8.46 one, and even higher than the breakout low at 1047. It gets above it, congests within it a little bit, but the higher lows continue. Higher low here to here. All of these higher lows, and then failed breakout attempt here. Dating is trying to break out in here, and boy, did it ever do such, because the market is now moving into what would become its next key level. Because we had that 2094 is where it would go to getting above 1447. And well, sure enough, it holds in there. And it's a choppy until, of course, it gets there. But there it hits it. The $21 mark. If you don't get resistance where you're supposed to, a concise move to the next key level. The day it hits it is September 24th, 2010. Kind of left it on the 28th. I mean, definitely not for good, but concise move to the next key level. Ooh, almost got there on December the 7th. And almost, but definitely a pierce. Nice pierce last January the 3rd. And then after another higher low, a break it. So if we break this, well, that next key level is near 50. That's what the statement would be stating at this point. And sure enough, it did it. Next key level, I think it's 75. We'll get to that to a point. Of course, it doesn't hit it. At least not yet. Resisting it once and again. And then, well, they captured bin Laden. And that was the big reason. So that unfortunate news stopped the 75 free market. Oh, that's up for debate whether any of those subjects, but I'm just going on with my monkey brain remembers. With that being said, it almost came down this point when it came there, piercing a little higher. But as the market worked out, retracement from this low to this high, the key, if it doesn't get above 61.8% of its move, then that move is a real one. And this was a real down move, at least on the more intermediate term. And because it gets to the 61, and then as you see, it fails in here, breaking it below, significantly below that. But what did it do right from pretty much that day forward? It congested at that 31.42 handle for quite some time. So we enter 2012. An opportunity to break down here. Oh, not so much. And then back over 30. So for years after the big down move, the price action was in the range of 26 to 33. Piercing a little above, a little below. But then came the situation here. This support failed. Next key level. Almost. And then all this stuff happened. And then we have the support here where it pierces. It now has that hit. But it continues to show weakness along the way. And just like it was at 31, congesting at a continuous level, then I could just probably fast forward for so long because this was, oh my goodness, can you believe how long? The price action, actually no, I'm thinking, no, it went down to 14, that's right, yeah. Never mind, throw that out, I'm not going to redo the video. But what happened here is it resisted this on many times. And then as it broke down 18 and all eights, concise move. And at first it didn't hit this level, but it did here. Making an okay rally, but coming back to it. And this is what's often about key resistance and support oftentimes. When you get there the first time, you barely get there. So here he gets there, it was barely there at 1409. I mean, you had some time where it was like 15 and change for a few days, and then it was up to 16. And then, down. But I mean, how many hours did you get? Definitely at this price, minutes even. And then you have this mover shoots up quick to fit 16, and even later up to 18. But then on its next move lower in 2015, now the next time you spend significant amount of time. That's just common. Same thing on the upside. You hit a move quick. See, that's one thing we haven't done at 50 is spent really any time there. Consistently. 1980, what, a few weeks? Really? Yeah, even days. Yeah, many days. It wasn't just like a... And then same thing again in 2011. But then after 2016, it finally lifts off and pierced less on this one. But it was a close hit. Usually it pierces extra. This is one of the times where it didn't do so. And here we have this exact hit that comes in after several lower lows and even a few higher highs here, but whatever, on that move from here to here. And then this is the chopping around stage that I was thinking about. In between these two lines, but mainly at the lower end. Another retest, and there's that situation. You spend a little bit of time there, you come up, and now you spend more time there. And when you see this, oh, you're resisting this support. That's both bullish and bearish. It's bullish, of course, if you could able to hold this low, which you can see it did. Now, of course, you're going to get what's going to be coming. The big lows for silver from this move happened just recently in the March event. And we're going to see that happened right there. So since the breakout, the lows in here stayed $11.63.9. So 11 2/3 is what it came down to. But you had like no time really to buy there. And then if you're trying to buy, what they call the paper market is pretty much what you're getting at that. And then the prices of the physical, you're still paying half the premiums were hefty. And it was right to buy their premiums based on, of course, what's been going on. Because the market comes up to this level, resists it, then gets above it, almost support, close but not really. I mean, it supports like 1460 a bit better, but even still in that area. And then no resistance, but what's happened is we had a move that pierced a little bit lower and support that pierced a little bit less twice in a row, much noticeably here. It's kind of surprising. It's kind of a little head scratching for me at this stage. A little bit of a failed breakout here. Not yet. You know what, you would have thought that on start of September this thing was poised to make a run to about $32, $33. Of course it didn't. And now maybe what happens is just like I showed so many times, you spend little time in here. Maybe it does come down. And I mentioned before about it making even a significant little bit move to 20. So it comes down short term to the 20. And maybe we congest at 21 for a while. I'd actually like to see that. That's what I'd like to see. But I do highly believe that these key Fibonacci upside levels, which is taking the range of the 1980s and the 90s of $4 and high $8 low. Because all of these numbers, and I'm just going to move this to the monthly chart now. 1047, 1447, 2140, or 2140. I think it's 2146 actually. That's exactly what it is. And then these other ones are all from mathematics. 8 minus 4. That's early stage mathematics. That's 4. Most certainly. Okay, well let's get off of early. Let's go to go from grade 2 math to grade much higher. Maybe grade 10, 11. $1.61803399989. That's Fibonacci. And then multiply the previous number by that. And these are the Fibonacci numbers going down. So whatever you want to do with these much higher numbers is up to you. But that's where they're calculated. On a break of 50, this is going to be 75 is going to be huge. Probably up to even $80, $78, 78, 80-ish or so, maybe 76, 77. On a break of 50, expect a high probability of a concise move. And within the concise move for it to be wowzers to one form or another. If it doesn't find resistance there, next key level is 120, then 192, then about a little pace, about 300, then 500, 800, we'll go 1300 after that, then 21, 3400, well above 5,000 after that. Then 8,832. Here's a game. How far do we go? I can even do a bunch more of these. just for something to do. I might have to extend the size of column with C in here, or put some commas in to make it easier to read. So let's put in thousand separator to note its decimals. So 3,354. A million would be the Fibonacci level here. Level number, well, I guess you could subtract 4. So that'd be level number 26, because I'm starting at number 5 instead of 1. That's why I subtract 4. I don't know if it can make it to that. Definitely not anytime soon. But it's like a game. What's the highest it's ever going to go? In fact, I'm just going to make this look a little bit better here too. Will we even get to the 1292? I think we will. And if I were to have to make the guess, just for something fun to do, because I do believe there's going to be a final score. And I define the final score as the highest price, which is pretty much the last price, that people will ever care about silver moving forward. To me, these silver dollar prices will always be known in human history as long as we're here, at least in history. People look back at 1960 and 1980 and 1990, 2000, 2008, 2015, 2021, 2027, and however far we go. But how far will we go up, though? I do believe there's going to be a gold to silver ratio near 1-to-1, and gold's going to get like super high crazy too. So at what point would these numbers meet up? 97,000? Yeah, I think gold can beat that number, but I'd be leaning somewhere in around here. But that's just a guess. I mean, it's just a game. Thank you for tuning in. Have yourself a great day. Bye-bye.